Good morning, and welcome to today's webcast, Use Data for Accurate Forecasting. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams, Dhaliwal, Loren Denherter, and Brian Favorat. K-Deep has provided auditing and consulting services for food processing and agricultural companies since 2005, with revenues ranging from $20 million to over $2 billion. Loren is a firm leader of business intelligence and corporate performance management. He helps businesses improve their processes, become more efficient, and make better decisions. Brian has over 9 years of experience selecting, maintaining, and deploying financial system solutions and has provided management consulting services to public, private, and nonprofit clients. With that, I'll turn it over to Loren to get our presentation started.
Very good. Thank you, Chad, and thank you, everybody, for taking time to join us here in this webcast as we talk about agribusiness and forecasting and using data to actually be able to make quick, agile decisions that help move your business forward. So as we go through this, we first just want to talk a little bit about the landscape in agribusiness and how things are currently changing. Then to address that, we'll talk about some strategic approaches and then take a deeper dive into planning and go through a particular solution that we like to use in this industry, and then we'll talk about rolling forecast as we wrap this up. So to talk about the agribusiness landscape, K-Deep here is going to take us through that.
Yeah, thanks, Loren, and good morning, everyone. Thanks for being here with us this morning. Like Loren mentioned, wanted to just set the tone here about agribusiness and really just talk about the landscape and some of the challenges that the industry has faced over the last few years, and also talk about some of the opportunities that are coming out of some of those challenges, and really dive into why we think it's important more than ever these days to be using data for decision making and navigating your business through some of these challenges and opportunities. So if you think about COVID really having a profound impact on all industries, agribusiness in particular has had some interesting dynamics coming out of the last few years. The pandemic related change to consumer behavior was driven for multiple reasons, but a lot of it had to do with the supply chain disruptions that our businesses saw over the last few years. So it became very challenging to get product into consumer hands, shipping product overseas, interacting with vendors and trying to get the raw materials necessary to continue to produce and really fill the sales channels. If you think about what that caused in some of the commodity industries, some of the rice or prunes or citrus or tree nuts, because it was so difficult at times to move product and get it into the hands of the consumers, it created in some industries a glut of inventory, in some industries a shortage of inventory. And so it really disrupted how we manage and navigate our business through selling our product and getting it into the hands of the consumers. That resulted in changes in consumer behavior. Folks started eating at home much more over the last few years, really getting creative on how they cook, what foods they consume. And coming out of the pandemic, that changed ongoing behaviors and what consumers are looking for in what they consume. The ag industries also face a tight labor market, just like other industries, but in particular in ag, where there's heavy labor intensive work in the field, in the plants. It was hard to get people. It continues to be hard to get people. And really needing to understand what's the right head count based on what our projections are. That becomes entirely more important these days. Inflation is also causing pressure on agribusiness. I'm sure all of you have gone to the grocery store and you're seeing the cost of food is just significantly higher than it historically has been. And similarly, the input costs. So fertilizer, ag inputs, so anything that is necessary to run an agribusiness, those costs continue to go up and they're volatile. So really understanding what your margins are by segment, understanding what the forecast is, and using data to make those decisions becomes significantly more expensive, significantly more important, I should say. And then, in the interest rate environment, we all know rates are very high these days, and they continue to go up, and we're not seeing any slowdown there, at least in the foreseeable future. So, again, managing your business with the right data is paramount. The threat of a looming recession and a volatility in the commodity prices, all of these things are challenges that the agribusiness industry has faced. But let's talk about some opportunities coming out of that. So the agribusiness industry has always been a resilient group of people. I would say some of the most innovative folks in any of my client base are in the ag space. What we're really seeing coming out of the pandemic is there's continued consolidation and strategic partnerships. So some folks within the ag industry are trying to get more vertically integrated. So if you've previously had only growing operations, we're starting to see the need to consolidate processing operations, the need to consolidate branding. So that go-to-market strategy is really meeting what the consumer is requiring. And a lot of that consolidation is driven from private equity and institutional investors. They obviously see ag as a sound long-term investment. And so that's bringing a level of sophistication into agriculture that potentially wasn't there over the last 25 years or so. Other opportunities are, in addition to this consolidation phenomenon, is just revisiting the sales mix and the customer mix. I've had clients that need to do a deep dive into what type of products they sell, what are the most profitable products, and what are the most profitable customers. And without really good data to identify those data points, it's difficult to make those decisions. The other opportunities, with automation, we're seeing more and more innovation, automation, artificial intelligence types products coming into the ag space. So there's just a ton of opportunities coming out of the pandemic and some of these challenges over the last few years. But it's widely known that ag will always be a sound long-term investment. And I think that's why you're seeing so much of this private equity institutional investor money coming into the space. But, the ag industry has historically been slow to adopt change. If you think about it, the back office, the administrative functions, those are not the revenue generators for agriculture. So those are the areas that can sometimes go by the wayside. And what the result of that is the traditional planning and decision making hasn't been equipped to make quick decisions. And in many cases, operations are disaggregated. There's farming and processing and marketing capabilities sometimes throughout the United States by one entity. And in some cases, different ERP systems that don't interact with each other, or just having ERP systems that are outdated. And so there has to be a better way. There has to be a way to use data to the benefit and really take from what's happening in the business, take that information, and use that information for future decision making. And that's what Loren is going to talk more about this morning. So Loren, I'll hand it back over to you.
Yeah, thank you, Katie. And just to build on what Katie was pointing out there, going to talk through some strategic approaches here that we see working really well. In all of those changes that Katie was describing, it always comes down to there's options. There's different ways for each of those challenges that you can go about making decisions and handling them. But as it goes with options, there's always trade-offs. And just understanding what those trade-offs are and the net impact to the bottom line, because they're all kind of interconnected. That's where these planning systems, come into place for, the processes that you put around in planning, how integrated it is with your overall operations. That's what helps you to get to understanding these trade-offs very quickly. And so, as you're dealing with this forecasting uncertainty, when you have things like prices of commodities and production costs fluctuating and not always in favorable ways, it's, they happen in inopportune times. And so having something where you can take what the reality of the business environment is at the moment and be able to look at that and look at various scenarios around that is really important to understanding choosing one approach to dealing with it as opposed to another approach. And what does that mean? How do you optimize that given all the interconnectedness of the business? And sometimes that comes down to financing extensions, and those, as you're sure well aware, often need really compelling plans. And so when you're, putting those plans together, you want something where, you're be able to act quickly and, get things to regarding financing out there in a way that is presentable and gives you kind of that overall look of the integrated business and what the impact of your decisions are. Then there's also just this thing about mitigating the challenges of planning and forecasting risk. What that means is, anytime you're out there forecasting, it's not just one particular plan, but you'll have one at one end of the spectrum, and then you'll have another scenario on the other end of the spectrum, and it just defines it's likely to happen in this range, or we've heard the term the cone of uncertainty, which is it's the likely range that it can happen going forward. And so having a way that you can look at that and say, okay, because I can quickly run multiple scenarios, I've now reduced my risk in forecasting and can pick one that is likely and the safe for the business. It's in the midst of doing all of that, there's also the supply chain variations that Katie was talking about, and they too never happen in an opportune time, and you're going to have to react to them in the moment. And so just evaluating, what is the impact looking forward, and what do you need to do in terms of readjusting the plans over the next month, quarter, year, and working with your the supply chains on both ends is something that planning can really help with. So this comprehensive scenario planning is really what I'm driving at here, is that you can have more than one scenario that gives you a good view on what is safe for the business. And so that's just to expand on that further. So it's really about this decision making, supporting decision making in a very responsive way. And because these changes are material, being able to work with them quickly. It just seems like these things are coming along faster and faster, as time moves along here. So being able to have, an area or look at an area of impact in one part of the business, it's never isolated. It always kind of goes throughout the organization. So if you have, something that helps you in an integrated way, look across the organization, and then quickly have everybody chime in on, okay, here's what this change means for me, or what this scenario would mean for me, and then be able to take that and optimize it. So that's just another way of saying it's a fast assessment of the results. So it's a way to, we're using the word agile here. I also like to use the word nimble. Are you nimble and able to act quickly because you feel like you have the right information and you're making an informed decision about how you're moving forward? So just looking at, as you're making the decisions, a lot of them are based on trends, and just having the ability to see those trends, make decisions on those, and do it in a timely way. So it's not kind of like after the fact. We tend to use this wording around know what's happening rather than looking back and see what happened. And we'll talk a little bit more about that as we go forward here. So with that in mind, just wanted to go through a quick polling question here to get a sense of our audience and where things stand for you. And this is just a question around, how quickly do key production decision scenarios get evaluated across your organization? So just taking that concept of have multiple scenarios impact in one part of your organization, and then how does the rest of the organization respond to that? The different options here are you already have a comprehensive planning solution. It happens fairly quickly. Other one we see much more common is that, not so fast. There's a lot of spreadsheets involved. You have someone that kind of manages those spreadsheets, gets them out to the departments, pulls them back. And it takes a bit of time to see each scenario as it comes in. And then lastly, what we also see is just, decision scenarios, you don't have all the information. You're doing the best that you can with what you have at hand. It's a little bit of a gut decision, if you will. But, this is, the different things that we do see across the industry. I don't know if that kind of resonates with you, Katie, as well. All right, and so I'm going to do here is just take a quick look over at the results. And yeah, so 9% comprehensive solution, we are seeing this come into the industry. So this number is actually growing for us over time, which we're happy to see that, because it's a really solid thing to do. There's a lot of very quick ROI in doing this kind of work in your business. But traditionally, what we have seen is a lot of work in spreadsheets, and it does take time and effort to do that, and there's opportunity there. And then that 22% there, where it's saying that there's evaluated in isolation, that too has stayed fairly steady over time. So let's just take a look at this automated planning, a bit of an overview here. So that's, really what we're driving at here is to say, if you have automated planning and it's tied in with your other systems, it gives you a really deep insight into what is happening and how you can use information to help drive your business forward. So what we have found is that there is this very common statistic we see out there in multiple different channels where CEOs want their organization to be more data driven. And it kind of all coalesces around this number of 83%, that there's a very large number of CEOs where that is what they really want to happen, is to have better information, good insights into their data, and then be able to make not only decisions with that, but evaluate scenarios with that. But the other side of that coin is that right now, out of those 83%, only 30% believe that they actually are a data-driven organization. Now that number tends to, grow over time as these kind of solutions are making their way into businesses and becoming adopted. But the graphic there gives you an idea on, what these solutions do. And so, starting on the left-hand side there's, something has come in that's either a change or a new time frame. And so those inputs are coming into the overall planning model. And in that model, everybody's attached to it. Everything from distribution, your supply chain, inventory, finances, the whole thing, right down to driving what staffing is. And in that middle circle there's an important term where it is taking information and embedding that in the business process. It's so, where people would naturally go to see their information, their data, make their decisions, is to have this planning embedded right in the midst of that. Because then you're working in concert together. What you get out of that then is a full impact evaluation. It means you have, engaged the entire organization. Everybody's put in their inputs, and it's come down to, okay, here's the overall impact for each of the scenarios that goes in. So, if you're doing this in an automated ways, what these tools are meant to do, if you're using spreadsheets, you can get it done. It just delays the process. The problem with delays is resource management is always what gets kind of, harmed at the end there. It takes more lead time to deal with resource management. And the faster you can get through your planning and your scenarios and land on a decision, the better off you are in being able to work with those. And so it's all about being able to have confidence in the information you have so that you feel like you have good reaction time. Or maybe a better way to put that is to say you're taking action in a critical or in an informed way, and it doesn't feel like a reaction. So when you have these data-driven strategies, really what that's about is integrating together both how things are going, so having good insight as to how things are progressing, but at the same time have planning data on that same dashboard or in that same report so that you're seeing, here's what we plan to do, here's how things are actually going, or here's how things are actually going, and then here's a scenario that would say, here's how we can deal with changes that we need to work with. So just another quick polling question before we get into talking about a specific solution. We're just curious about what tools you use to plan, and the common ones we see are their spreadsheets. There's a growing use of automated planning solutions that are integrated with your other operational systems and ERP systems. There are some other tools that get used out. There's a variety of other tools. And then there are some organizations that, they're doing quite well and the annual budgets are not really created. And it's just, keeping close tabs on how operations are moving forward. So what we, will often see on this is that, spreadsheets are, kind of the first choice. They're, powerful, but they have their limitations for sure. And they tend to, have errors kind of, baked into them. You're moving fast, you're trying to make the decisions, and inadvertently, a formula is pointing to the wrong place. Let's just take a look over here at the results. And yeah, so this is the common thing we see is that there's, 86% using spreadsheets. That is surprisingly close to the 80% of the CEOs that want to be data-driven. Then you take that other number, 30% that think that they actually are. So with that in mind, there's a solution that we have found works really well in this industry, and it's a Workday solution. It's called the Workday Adaptive Planning. And what I want to do here is just give you a bit of an overview. We'd like to just show you what that tool looks like, so you get a feel of not only what the tool looks like, but when we're talking about automated planning, what does that mean? Like, what does it actually look like? So we just want to give you a view into what that looks like. So what we'll be going through here is just this, bit of a process where you have, inputs from where does sales and marketing think that your product categories are going to go? What's the anticipation out there so you can start to build your operations around that and be able to talk to your growers and build grower contracts around all of that. So you can bring that data in. The full plan will be available to all the departments. You'll kind of see how that comes in. The executive management can then look at it and say, given these different scenarios where we think that the variations in pricing and costs are going to go, here's the gross margins targets that we really need to make this all work. And then that'll flow into, okay, given that, then what's the resource allocations and specific guidance for the different departments that you would need. All of that really revolves around a lot of timing as well. So as you get in here and begin looking at the timing of how things go, that has, a critical aspect about how your overall plans go. And then with that in a tool, then you have this continuous embedding of the business process, which means you will see these plans and how things are shaping up in near real time in the solution. So with that, we'd just like to go into a quick demonstration here, and Brian will show us what an automated planning tool could look like.
Perfect. Thank you, Loren. All right, let's get my screen going up here for everyone. All right, so welcome to Workday Adaptive Planning. So for the demonstration I have prepared for us all here today, I'm going to walk through an example of this company F. So company F here represents a food processing company. So company F, it consists of a few different departments. And what I can do for everyone is make this a little bit bigger here. And in their operations, we can see this company is operating in a few different locations. So perhaps they're designed around their facilities. So we have Central California, Southern California, Central Florida, Southern Texas. And then with the tool like Adaptive, what we're able to do is represent that company as you would sort of expect to see in a data visualization tool, right? So this is a nice platform, but what this is really offering here for us is management insights. So when management team, executive team, decision makers are looking at where are we at in the business, getting that near real-time feel, I want to understand, okay, how are things trending, right? So if we're looking at the summary tab of the business, this provides some sample oversight insights that executives might be interested in looking at. So as an example, we're seeing things here like net product revenue, revenue broken out by state, revenue broken out by product, cost of sales, forecasted projection with some historicals to help provide some context, and gross margin as well. So these sort of graphs provide an excellent overview and a place to kind of jump off from in terms of, okay, where are we at? And leveraging tools such as Adaptive here, what we want to be able to do is have interactive conversations with the business. So this graph is not just a pretty picture, but rather it's interactive where we can go into one of these places. So for instance, somebody's interested to see how are we then trending or doing then in perhaps October, right? So one could click into here, they could drill down. Okay, this is coming from our organizational group for operations. Continue to drill down. Immediately we have some greater insights about how our business is trending. So where is this revenue coming from? How is it incorporated into the business? So easy to navigate, easy to utilize. So I usually start here with getting some contextual understanding of like where we are usually driving towards. But having the financial insights is also, it's equally important to have the operational insights as well to provide that context as to, okay, what do these numbers mean? How does this translate to the actual operations of the business? So again, some graphs here representing some units sold, our sales by product, COG summaries, and also process units, perhaps by state or region. We see a variety of these different types of graphs. But again, what these sort of presentations here are for is to help provide context to the business, create excellent dialogue and discussion with the organization to start asking those right questions so that they can help evaluate what the best decisions would be going forward. All right, excellent. So this is sort of where the data ends up. And what I want to drive through now is how do we get to here, right? So with Adaptive, here's a table that represents commodity volumes received from growers. So what I'm going to do is I wanted to show you kind of holistically here to Loren's point. Time is always a very valuable metric as it pertains to forecasting things out. So you can see there's lots of time associated with this. I have a 2-year projection here. But what I'm going to do is I'm going to zoom in a little bit for everyone so make it a little bit easier to see.
Excellent. Zooming in there, this is what I was referring to earlier around, grower contracts. When you're planning forward and you're creating those contracts. It's like, when do they come in, and have that right in, and this automated tool is super helpful having that timing. Yeah.
Thanks.
Back to you, Brian.
Thank you, Loren. So this demonstrates how the organization can receive different commodities by various grade, by pool, by commodity. So here I have some volumes identified in pounds. So this is for simplicity purposes, but often we see clients receiving in different metrics, a variety of different metrics. But here we can plan each of these pools to be received in their corresponding timeline. So it makes it a very simple, easy to use, navigatable place. So the next part of the process here, I'm going to pivot over to our pricing sheet. So this table represents commodity pricing by commodity, grade, and pool. So again, I'm going to do a little zoom in for everyone. Other factors could be incorporated in here as well. These are just some highlights that we often see in a sort of generic form. Here, the sales and marketing team can come and apply the latest pricing projections based on commodity segments. We find many of our clients have this type of information living in really large Excel files, as may have been indicated by the previous poll question there. So here, what we're trying to do is help to organize it in an easy to manage place, and also create a process around bringing the information into the system. So we find many of our clients are either in an operational system or Excel, and what we can do is in either case, we import the applicable details and projections from either that Excel file or those other systems in here to Adaptive. And there's a variety of ways we can facilitate that. The simplicity here, again, expressed in pounds, so you'll see that theme as we go through into the next models.
Yeah, and with these pricing here, what you're seeing with it on a calendar going, a couple of years into the future. So as these fluctuations happen on a month-to-month basis, you can say, we're projecting going forward, here's where these things are landing, and then in the models be able to say, great, given those prices and where the supply chains are at, what do we think the net impact is going to be on pricing? Yeah, back to you, Brian.
And working our way there to the net effect. So here we have the cost detail sheet. So here's a breakdown of our costs by the applicable categories. So we have commodity, and then this represents different types of expenses that the business might incur. So it's a simple yet effective interface with product costing. Similar to the pricing model, we often see cost detail information stored in spreadsheets or operational systems, not tied directly with the financial reporting system. So again, this creates a mechanism for centralizing that information, as Loren had alluded to earlier. The information can be imported into Adaptive and stored for calculation purposes. These costs may represent the target or most likely costs of goods sold. However, with Adaptive, you can easily create different versions or variations of this to allow for what-if analysis. So what we have represented here could potentially be what the most likely outcome would be, the highest confidence. But again, if we wanted to see different variations of this, we could store these in alternative versions and be able to project what that outlook would look like. So breakdown, we have different facilities here, different types of commodities, different cost types, all integrated here into one place. So we've gone through our volume sheet, our pricing sheet, our cost detail sheet. Next, I'll pivot over to sales. So continuing on with our demo, we arrive at the sales cube. This sheet represents the effects of the volume, pricing, and product costing sheets, all connected together. And again, I'll zoom in a little bit more so everyone can see here. So the timeline, very important, but doesn't really help with being able to see it on the screen sometimes. So zooming in there. So as the business is getting newer and better information, this can all be updated in real time. So here we can see our total units, spoilage factors, units sold, sales, and various cost of goods sold categories. So really we've covered a few of these items as we've come through here. So we've talked about the different units, incorporating our pricing to achieve sales, and our processing costs, all being summarized here and evaluated at these different levels. So I'm looking at here operations as a whole, But if I wanted to be more specific with the part of the organization I'd like to look at, I can then drill down into my operations under my company F here. And this is just one example. Perhaps there's multiple organizations underneath. All of that could be represented here as well. So I'm going to click on Southern California as our example. And then just like that, what this screen has done is pivoted over to Southern California. So this is the related units sold, the pricing, the sales, the cost of goods sold. And what I'm interested in seeing here is some of the output figures in the form of our gross profit here at the bottom. So we can see our gross profit fluctuating from month to month. So one of the items that's very important to the cost side of things is definitely labor in particular. And labor can be a difficult thing because sometimes we have more static labor in the form of corporate offices or centralized shared services. But there may also be a variable workforce component more dependent on the volumes that the business is incurring. So at different parts of the year, perhaps there's fluctuations in that volume activity, and there may need to be different workforce components to address that. So in addition to this, I have a labor planning model, which allows us to plan out the workforce component, the variable workforce component on certain job types. So for the sake of simplicity, just have a few different types of roles here that can be represented. But where this really starts is at the top of the screen, as I hope everybody's able to see, is my units processed. So what this does is it gives us a jumping off point. So this is our processing facility for Southern California. And the value of a model like this is it's dynamic to either the region or the location as well, because we might have different workforce needs in different places depending on what types of volumes are being received there. So underneath our units processed, we have a headcount needed per units processed. So here is an assumption value based on the number of units processed of how much could be processed for a single FTE in that role. So here we have a supervisor, perhaps a general laborer, a line operator, and based off of those inputs that we're providing, Adaptive can produce our FTEs. We provide some wage rate assumptions here beneath that, and then some operating assumptions as well. So we have operating days, hours worked per day to produce number of hours. And then the grand finale here at the bottom is to achieve that wage expense. So we're identifying our wage expense by role, by location. So with a dynamic model such as this, if we go back to the top here and our units processed is fluctuating potentially into the future, as you can see here, the numbers in terms of FTE fluctuate as well. Trying to keep as consistent as we can with where things are trending. So as a simple example of the reporting capabilities here, the dynamic planning, what I can do for everyone is show a simple example of how we can adjust, how margin can change if assumptions are changing throughout the year. So if we pivot back to our sales sheet here, very easy to manipulate. I'm just going to focus on FY23 for this example. So what I can do is I can simply hide or close some of those periods that we don't want to see, just to make the visualization a bit simpler. Quickly run it, re-render it, and now we're just isolated on Southern California for FY23. And it looks towards the end of the year, we have gross margins by month achieving somewhere in like the mid to high 30s, high 20s, low 20s toward the end of the year. So in our labor planning model, if we see that perhaps there's changes happening in the industry causing wages to increase for whatever reason, perhaps certain roles here need to be adjusted to reflect that pricing. And again, this could be maybe just in one region, but not another. So in our example here for Southern California, if we increase our general labor and our line operator wages from $15 and $20 an hour respectively to something, for instance, maybe 16 and 21, we did something such as that. And then similar to Excel, I can do a simple copy paste, or if I wanted to, I can roll things forward. Very easy to interact with the tool. I click save, and what's going to happen is my profit assumptions here, my forecasted profit assumptions are going to change. So the easiest way to see this maybe render would be based off the end of the year, 25.41 is a projected average. So if I go ahead and I save and I apply that change, We go back to our sales sheet. I re-render it here. What we start to see are some changes. So it's a very effective way to just come in, make some certain what-if analysis identifications of, okay, well, if we make small adjustments here, what is the effect to the business? So very good.
Yeah, so what you're seeing here is that it's the planning tool is fully integrated. It's addressing every area of operating the business, and each area weighs in on what's happening there. It pulls it all together and then gives you, a bottom line result, in this scenario. Yeah, back to you, Brian.
Excellent. So these are sheets where the business could come and interact with the projections of various components. So operating departments may be coming into here. Sales and marketing, again, operating, costing, accounting departments may be coming into here. We're getting all the different components of the business centralized to a single place to be able to make these adjustments to what the forecast could be. That's by producing an outlook. So sheets are a great way to interact with the tool, but equally as important is the ability to evaluate and analyze the results of those changes. So here I have a simple snapshot margin report, kind of giving a simple breakdown of each of the different facilities, broken out by commodity and identifying what our margins are there. So again, this is a demo environment, so these projections could obviously be what we prefer to make them, but what this can illustrate is perhaps if margins are a bit lower than they should be, perhaps different components of the budgeting process haven't been complete yet. But if things have been put into the system and everybody's identified what the latest and greatest assumption is, this might highlight some areas of inefficiency. So in my example here, what I've done is I've created some conditional formatting to identify areas that are achieving less than a 10% margin. So with these types of graphs, what it does is it illuminates those literally by highlighting them. So it gives a simple and interactive way to manage these different assumptions.
If you could zoom a little bit too, that'd be helpful. Awesome.
There we are. So peaches are doing pretty good, my favorite. With these types of reports, also, we can make them pivotable. So I had a FY23 projection, and then if I wanted to see FY24, I can make a report such that it allows me to simply click something different, click run, and I'm into the future. So these reports, this is very much a business user's tool, able to come in here. It's a lot of drag and drop, simply place things where you'd like them, and we're able to then render the results of whatever the component of the business is that we're trying to isolate in on. So another report that I can show here quick is an example of something more traditional as a P&L. So we see our unit metrics at the top there, followed by sales, cost of goods sold, gross profit percentage. And then what this does for us is it helps identify similar type things. So we often see these types of reports when we're comparing entities together or similar type operations. So we have, Central California, Southern California, Central Florida, Southern Texas, all listed next to each other with regard to how they're performing. Excellent. So just kind of circling back to the beginning where we began. When we leverage a tool such as Adaptive, what we're looking to achieve is better insights into the business. We're trying to use this as a decision support system. So by creating a platform that we can centralize a lot of this information, we're getting greater involvement with all the different business units, getting that near real-time updates so we can see how things are trending, where are we going, and trying to identify via perhaps something like a snapshot report, potential areas of interest. Sometimes they just identify maybe a process problem or potentially a problem with where we see things trending in terms of costs. Summary, sales, all these different components. And again, there's a lot more capability we can do here within Adaptive, but what we're trying to do is create the best insights to make those decisions. Excellent.
Very good. Thank you, Brian, for that. So that took us an idea of, when we're talking about a automated planning tool, what does that look like? And, in those planning tools, it not only lets you put your plans together, but it's also bringing in and integrated with your operational and finance systems and showing you how things have actually transpired, and then giving you that variance reporting so you can make decisions on that. So with that in mind, just another polling question here is just how would you rate the effort to compile your data into actionable information? And so, it's easy in that it's automated, or, moderate, you have a kind of a repeatable method, take some effort to put it all together. Or it's a high effort. There's lots of, manual data manipulation. And, we see this actually quite a bit, where you have to download data from different systems and then take that information and manipulate it, summarize, clean up, and then pull it into your spreadsheets. And then from there, begin to formulate it into reports and divide it out by different departments. And so, while this defined process, there's quite a bit of effort involved in doing that. And so we are seeing a growing trend towards the automation, but there's still, quite a bit of effort that goes into these reports in a, traditional way. Just to take a quick look at the results here. Yeah, so moderate to high effort is really where we see this a lot. There's, these two things kind of combine together, because it does take quite a bit of work usually to get it into, a defined method and moving forward. But, the speed of it, that really defines where you're nimble. As you kind of move up in this is where nimbleness in your decision-making process really kind of comes together. So rolling forecast, what we saw there was a way of, actually going through an automated process. And so rolling forecast is an important aspect of that, so that you are not only seeing what has, happened, but it's like what is happening right now. And this slide here is really talking about the value proposition of why would you go to the effort of implementing an automated system. And this is where the value proposition is. And it's this difference between, in the decision-making window, you can actually make a period come out different, and you can manage what's happening. But once the period is done, then you can't change it. It is what it is. When you're working in spreadsheets, what tends to happen is there's quite a bit of effort, as we saw in that last poll. And because of that, you wait till the period's done before you put in all that effort, and then you get it out to the people that need to make decisions on that. And so you're a week and a half, 2 weeks out there, where you significantly, one, you're beyond the end of the period and you can't change it, and two, you're significantly into the next period before you even have the information to either validate what you've done or start to make these decisions. And so if you're to back that whole thing up in an automated way, you're able to say, like, here's what's happening right now, make those decisions, make sure that you're staying on track inside that period, and there's real business value in that. So this is really a key value proposition in doing this. And what we hear from CFOs over and over again is they need their decision makers to make one good decision a year that pays for the system, and everything else is gravy. And they see a lot of ROI from that. In terms of rolling forecast, this is what it feels like. I'm sure you're all familiar with this, where when you have your annual plan and you have it go to the end of the year, and then you see how that works. There's always that cliff at the end of the year before you get into that budgeting period, build the budget for next year. When you're in a rolling forecast, what you're actually doing is you're saying, here's what I have here's how things actually happened right now. And then I forecast where do I want us to be a year ahead. And if you do that every period, what you're doing is when you get to that time for the budget, the formal budgeting, you're kind of already there. Not only are you already there, you've engaged your team to say, here's looking forward projection for the business where we would like to be. and the whole organization is working through that rolling forecast. So you have way better integration and better engagement across your management team as you work through rolling forecast. Systems you saw here are great at rolling forecast. It's kind of built into its DNA. And one of the reasons that we like to use the system for that process. Another view into this, so we talked a lot about different scenarios and scenario planning. And so, one, you want to have this comprehensive analysis, across the organization, but then scenarios, be able to set them side by side and say, planning with these assumptions around inputs, these assumptions around cost, these assumptions around pricing of the commodities in your end products, then you would have, let's say, your budget. And then as things are actually happening, you just set that right next to it. And you can say like, oh, okay, so as that's how it's happening, I need to react to that in near real time and build my new forecast, and then be able to look at it and say, here's how the forecast is aligning with how things are actually shaping up. And here's how it differs from our original plan, and do that at the push of a button. So highlighting what has changed really helps to drive insightful decision making. It also drives that agility or that nimbleness in, if you can plan fast, if it's across the whole organization, then you're confident. Your confidence in the decision making has gone way up, because it's almost like you're not forgetting something. Everybody's involved here, and you're working as a team. So actuals coming in, integrated with the other systems, planning for scenarios going forward, driving good decision making. So just to go through and kind of pull this all together here, there's some of the summary of the benefits of automated planning. So one is just it powers rolling forecast. That rolling forecast capability, I really can't overemphasize that. It's not only about having information right there at your fingertips, but it's about really engaging your management team at a whole new level. So I kind of harken back to the previous slide where we were talking about the difference between talking about what has happened and what is happening. There's such a big value difference between those two questions that it really drives the value of investing in and changing your business processing around this automation. And that really manifests itself in these rolling forecasts. The efficiency of the budgeting process is, so you can have complex budgeting processes, but have them automated is kind of the key there. When we talk about complex budgeting process, usually what that means is you have detailed models in each area that really drive out the nuances of the business. And you really need those details and you need those nuances because they kind of bring the reality of your business environment into it. So you're not at such a high level that you're kind of masking over what's going on. But when you get into that level of detail, that's where the complexities come in, and that's where we see, the various issues with formulas and so on in spreadsheets, where the size of the spreadsheet gets so big they're unwieldy. And so these tools are kind of, absolutely made to address that and have very real models that can be as detailed as you need, and they pull it all together in a way that you can work at the detail level that you need, but still see overall what is happening as each department kind of weighs in on that. And then with organizations, any more these days, we're seeing that there is complexities in just how they're organized for a lot of good reasons. Legal, accounting, tax, the whole bit. And what that drives is then you're going to plan for how you're organized, and you're going to plan for how you operate. And as you do that, that means that you need to consolidate. And it's one thing to consolidate what's going on in your accounting and operations and all these transactional systems. But if you're able to also map that into your planning process and you're seeing that same consolidation, all of a sudden there's a lot more clarity around what your planning is driving to and how you align it with the actuals and then do that in an automated way. The easier management reporting tools just means that you as a business user don't have to go through a development and test cycle with an IT developer, but rather just create the report you need, create the dashboard you need, and be able to see that. And what we're talking about here goes beyond just finance. It's also about operations, and doing both of those with what if analysis, very rapid, simple, efficient. So a lot of benefits come with this automated planning, and there's just a very clear kind of value proposition of working with that. So just another polling question here. So how often do your department managers update comparisons between, or see the updated comparisons between the actuals and the plan? So is that something that you can just do quickly? If they can go in there anytime they want, push a button, see what they need? Or do you go through this process weekly, kind of stay on top of where the business is going and the most recent changes? Is it more around a monthly or quarterly? So just be good to get some insight as to how quickly do you currently see it. What we're suggesting here with automation is that it would be continuous, meaning if you've embedded this in the business process, it means in the midst of doing their work on a day-to-day basis, they could go into the solution and see, here's where I'm at the moment. And as the business environment changes, they'll say, here's a scenario of where it could actually be to react to the reality of the business environment. So this, again, it's traditionally have been heavily weighted on monthly, sort of like it is here. We are seeing a growing trend now to this continuous planning system. And that's, for the most part, coming right out of that monthly number. And, for those of you that are doing that, you're recognizing that there is, real business value of making decisions in that decision-making window and engaging your management team at that level of responsiveness. So there's this, I like to close with this slide here because it kind of pulls together at an organizational level on what does this mean? And so what it means is if you have a system where you can go in and click and get this continuous view of how things are going and this continuous possibility of testing out your decision making to see how that goes, then you're being responsive, which means you can actively plan for everything. And active means like in real time. So if you have that level of responsiveness that is, going in because information is flowing in embedded in the business process, then you're able to be adaptable. So it's this whole virtuous cycle that's going on here. And when you're adaptable, it just means that you can recognize quickly what's going on and then adapt to that in a real way to optimize what it could mean for your organization and change up how things are going in operations. If you're being that adaptable, you can hardly avoid also being collaborative because you're not making these decisions in isolation. Rather, there are those departments that are around you that are having to also not only react, but work in concert with you to say your changes are meaning changes in their department, and they can get in front of that and take meaningful action around it. If you have that much of the organization working in a collaborative way, they're absolutely then empowered. They have the information, they have the decision-making tools, they are then empowered to really move forward. And if you're empowered, then you're also in control. So you're just seeing bringing information in, getting inside the decision-making window has huge benefits for the overall organization and the trajectory of where the team is going. So with that, I just want to thank you for your time today. we'd be happy to start a conversation with you, and so you can explore a little further into it. We just wanted to give you some insights of what is becoming available in the market and how we can help you out there.
Great. Thank you, Katie, Loren, and Brian for a great presentation today. If we didn't have time to answer your questions, we'll do our best to follow up with you after the webcast. And here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you for joining us, and we hope you join us again next time.